Bill was spot on with regards to his response to your question, but one of the benefits of the creation of the OPEB trust will be that because we're have the assets set aside and then invested, there will be a percentage return on those assets. That interest that we earn from the investment, the dollars being invested, will lower the total liability that's outstanding for both the board and the city. So that's the ultimate benefit of doing the trust. So what we have to do, however, and albeit the board / the city hired Siegel Consulting as the actuary to present the numbers in 13-14 and then 14-15, once the trust is created, it will fall under the purview of the Pension Commission, and we will author our own valuation because it will be most current, and we'll do it through our existing actuaries, Hooker and Holcomb, who have served as our actuaries for the last 20 years.
So we'll save even money on the on our contractual obligations.
Yes, we can bootstrap that onto the existing contract with Hooker and Holcomb. We're going to be getting pricing from them once the OPEB trust comes out of committee.
Excellent. And Mr. Treasurer, Mr. Cloud, the floor is yours.
Thank you and good evening. My name is Adam Cloud, and I am the Treasurer of the City of Hartford. With me tonight is my Deputy Treasurer, Carmen Sierra. To her left is the Municipal Employee Retirement Fund's CIO, Mr. Gary Draghi, and to his left is the Assistant CIO, Mr. Wayne Moore. Things are well in Treasury. We are presenting to you this year a budget that totals $438,10. This reflects an increase of $79,202, or 22%, compared to the fiscal 15 budget. That net increase was due to a position being moved from the Finance Department to the Treasurer's Office. The Municipal Employee Retirement Fund and the OPEB Trust are going to also offset some of our salary costs, because the OPEB Trust will pick up a percentage of each of the salaries of our employees who will be assigned to work on the OPEB Trust formation and investment management of said trust. Why don't I start with what the mission of the Treasurer's Office is, which is, as the independently elected custodian and investor of all city funds, and the co-issuer of the city's debt, and the administrator of the city's pension fund, it's the city treasurer's mission to pursue prudent investment, cash management, and debt management policies so as to protect all of the city's monetary assets, relieve the burden on taxpayers, and leverage the powers and authority of the office to improve the quality of life for Hartford residents, retirees, and businesses, while maintaining the utmost accuracy, honesty, and integrity in all fiscal operations. The next slide, please. Just before you is a bit of an org chart. We have 18 FTEs inside the organization, split between the Custody of Funds Division, the Executive Office, the Investments, and the Pension Plan Administration units. We do not receive any grants nor any dollars from the CIP program, so we are a general fund budgeted at $438,000. But there, to be clear, we also have our investment portion and plan administration portion of the staff, which are paid wholly by the pension fund. And so our budget is larger, but it is paid for by the investment returns of the MRF, and therefore not a burden to the general fund of the city. The next slide just gives you a bit of a breakdown on how we split up the general fund obligation. We'll now move into some of the legal mandates of our office. Under the heading of executive management, we're there to provide leadership and oversight and support to our employees to facilitate the achievement of goals and outcomes. Regarding debt management, we serve along with the mayor as co-issuer of all city revenue and general obligation bonds that help to finance the city's capital projects. We have investor relations and public information, which help us provide financial reporting and information so that Treasury operations are open and transparent. And we also manage, on a short-term basis, the cash of the city that provides income and helps earn a rate. And in today's marketplace, the interest rates that we're receiving are at a high at 50 basis points. There were years past when interest rates were higher, where we were getting more than 2.5%, but as a result of the recession in 08 and 09, until the Fed decides to move interest rates, we're going to be struggling with a below 1% return on our idle cash. Just quickly moving through the investment management and custody of funds, these are just the rules of engagement for each of the departments. With the investment management group, which is Gary and Wayne, we invest pension and trust funds in order to achieve the maximum earnings with the constraints of a level risk containment strategy. We, in custody of funds, deal with the payment dispersal of all the city's obligations. We also work with regards to the bank reconciliation, which is we account for and balance the receipts and dispersals of the city in conjunction with the city's general ledger and the finance department's accounting system, which is Munis. Flipping ahead, our goals that we achieved this year: one, we maintained a very strong pension fund. I pause there just to say that our pension fund is one of the more highly regarded and ranked pension funds in the country as a municipality. It has contributed to the bond rating that we receive, which is currently a AA-, an upgrade from an A just a year ago. Last year, we were able to produce a 14% return versus our benchmark of 7 3/4. The assets stand currently at $1.05 billion, and that's up from $898 million since I was appointed and elected as treasurer. That was a total gain of nearly $150 million with a cumulative return of 17% in the last 39 months. Some of the goals that we achieved is that we officially launched our website, which has been well received by all our constituencies. We have significant information, including our minute meetings. We have information on each of our fund managers. We have all of the official statements of the city on with regards to our bond transaction. There's plenty of information, including financial articles and information that help educate the public and others if they're interested in financial literacy and further understanding the retirement programs available to them if you are a participant of the MRF. One of the things I'm quite proud of is we, along with Capital Community College, have created an internship program. We also have, before the City Council, if it has not been submitted, it should be coming to your body soon, a resolution that I'm seeking to create a trust that will create an internship program for our area high school students, meaning Hartford high school students. The goal here is that Hartford has and always has been a financial giant with large financial service industry companies here: Aetna, ING, Hartford. And what we're trying to do is take our young people when they're 16 and 17 before they enter college and introduce them to the financial services world. It would give me nothing but great pleasure to be able to introduce these young people to the opportunity to become a bond trader or to become an investment manager or to be an asset manager, and give them some sense of direction on where they may want to choose in their career path. And what we're going to do is not just have them be here for high school, but also offer them, when they come back from college in their summertime, a continuing role at those firms so that potentially they could build a career right here in home and bring those students back to Hartford rather than sending them to New York or sending them to Boston if they're interested in financial services. We have been actively working. I know some of you came to my office when we began this discussion about creating a loan program to help assist Hartford residents that are facing foreclosure. Additionally, one of the things that this office was very proud and must congratulate citywide, both the mayor and the council, for their support in the effort that we worked on, that when Bank of America closed its branch on North Main Street at the Terry Square location, we worked collaboratively to have Bank of America donate that building to the Hartford Municipal Employees Federal Credit Union. That grand opening is expected in June. I was there just last week along with Representative McQuarrie and McGee, speaking about how important that asset is to the North End, because our taxpayers in the North End of the city of Hartford deserve the same kind of access to financial services as anywhere else. And so the commitment made by the Municipal Employee Federal Credit Union opens that door and continues to provide the kind of service that our residents deserve. Flipping forward, one of the things that I've been committed to since I became treasurer was trying to continue to identify small, local, and minority firms that manage our pension fund assets. We have various managers here in Hartford that do work for us. Some of them by name would be Cornerstone Realty, Fairview Capital, which happens to be in West Hartford, Conning and Company, which is here locally. The Hartford are also local firms. We also have minority firms that manage on a trading basis. When our asset managers are buying and selling stocks, we provide a requirement that at least 30% of our trades get executed by minority firms, and that is a strong commitment to our small women and local firms to be able to have access to an area in finance which they generally do not have a chance to participate. We're a big fan of technology in our office, and we're trying to continually utilize technology to facilitate our prompt payment of our checks. We have been working closely with the administration, in particular the finance department, relative to being able to enhance our city parks through the release of dollars from the Hartford Parks Trust Fund. As you all are aware, we're working on the implementation of an investment program to create the OPEB Trust Fund. We hold seminars in connection with local banks. We generally do that twice a year to educate constituents and Hartford employees on financial literacy. We have recently created a document that I call the Residents Reference Guide. Inside of it is everything from what the role of the treasurer is, to our accomplishments, to the presentation that I've made regarding OPEB Trust, a breakdown on the baseball stadium. It also talks about the MRF and our entire debt portfolio as a reference guide so that our residents can begin to appreciate, as we go through this budget process, some of the key buzzwords or critical issues that you as council have to consider. I'll quickly go through this one. You know, those were the items, and then we were able to execute on all the items that we were referring to. Just for more information, on our website, we have a full listing of all of the initiatives that we are working on and those that we have completed. I'll pause there before we get into the MRF.
Any questions for the treasurer before we get to the MRF presentation? Councilman Cruz.
Thank you, through the chair. Good evening.
Good evening.
I have a pretty much just a simple question on certain transfers. I know that the general increase for the treasurer's office came out of a position transfer from the finance department to the treasurer's office. So I guess my question is there a particular division that position was taken from finance or transferred from finance?
No, it originally was in Treasury and came back to Treasury. It's our systems manager, fiscal systems, financial systems manager, the head of the custody of funds unit.
And they represent the same, does the position represent the same amount of salary or?
Yes.
Okay. Thank you.
Any other questions on the Treasury part of the budget? Councilman Deutsch.
Thank you, and through the chair, I wonder if I can ask this. The city raised some concerns about controls over expenditures and check writing, and of course there was some flap in the press, was it a year or two ago, about $850,000 or so. I was wondering if you or anybody knows where that went and whether it's recoverable to the city. You know what I'm speaking of, that check that was written to Mr. O'Gara, and whether there's a tracing of where that went and whether the city can be made whole.
So the city was never at loss, Councilman. Let me walk you through that very clearly. The wire that was sent to that individual was based on an invoice that was presented to this office and shared with the finance department. We were under the impression that that was a legitimate invoice. It turned out it was not. But because we paid it, and because that individual was the broker on the account, the insurance was made whole, and hence the obligation had to be held true from the insurance company. So therefore there was never any jeopardy of the city relative to our insurance coverage. Hence no loss of any dollars to the city relative to our insurance coverage.
I'm just asking, does anybody know where it went? What account it wound up in?
It was where it was deposited. I have no idea what he did with the money. It was sent and wired into a bank account, and it was then to be distributed to the agent and to the insurance company. To the best of our knowledge, it is still in that bank account, but I don't know whether or not, I know it never got paid, but I don't know what's going on with regards to the payment of said dollars. But we, as the city, were made whole as a result of the fact that that payment was in the stream of recipients that were due to receive that payment.
Maybe I should have asked the chair if the state's attorney knows where it is, or the feds, anybody. I don't know.
Chair knows nothing about that. Let's stick to the budget presentation we've been provided, and those other issues can be dealt with by other authorities. Councilman Anderson.
Through you, Mr. Chair. Good evening, Mr. Treasurer. Just
Good
a
evening.
quick question to the Municipal Employees Credit Union. This may be operational, but I'm not sure. Will it be open for the businesses and the non-members in that particular area? Are they going to be doing any kind of recruitment?
Okay, if I heard the question, are you asking, will the Hartford Credit Union be available to ordinary people in Hartford?
Yes.
Yes.
And the
So-
businesses?
Yes, so what happened was, as part of the process, the credit union went out and expanded its charter. So it was originally just for Hartford municipal employees. It is now available to Hartford residents and therefore Hartford businesses as well.
One more question through you, Mr. Chair. With your pamphlet, is that online?
Our book, our
Yes,
reference?
Your reference book.
No, we've made copies of it, and we've been handing them out. We've handed out nearly 100 thus far. If you'd like one, we're happy to prepare one and
You do
provide you.
101?
Yes, sir.
Thank you.
We do charge. No.
Put it on my P card.
Sure will.
Councilwoman Jennings?
Yes, through you, Mr. Chair. Thank you, Mr. Treasurer, for your presentation, especially the fact that you were planning and willing to work with Hartford residents and Hartford High School students. I have a question. I know you're aware of the municipal ID card that the mayor announced about a week and a half ago. And my question is there a possible way, because he mentioned a debit card function of that, is there any possible way where the our credit union can actually participate in that process of providing the debit cards to Hartford residents, particularly now that they've expanded their charter?
So, let me try and break that down. So if this is going to be a city mandate, right, a policy of the city of Hartford, we would need to go through the process of allowing the Municipal Employee Credit Union to become part of our banking pool, and that's a process through which I recommend and you guys then approve to have them be part of our pool. There's currently 11 banks that you all have authorized for me to do business with, because in our primary banking role, so if there were dollars that came out of the general fund, all of those dollars currently are through our primary banking institution, which is Bank of America. In the past, we have used debit-like cards, especially in circumstances in Parks and Rec when our young people have summer internships. Rather than giving them a check, we've given them little debit cards. And that has seemed to be something that they very much enjoy, because rather than having to go cash the check, they just use it like one of those Visa debit cards. Certainly we could figure a way to make that happen, but one of the first steps would be we'd have to have a formal arrangement with the credit union, which we'd happily have that discussion.
Thank you.
Council President Wooden.
Thank you. Through the chair, and I'd like to direct your attention to the page 3 of the detailed expenditure budget. And just to quickly, on a couple of the line items to understand them. So line 113001, this is business meeting expense. And so I noticed previously, so there's a increase in that line item. And previously, I guess what was in the prior year's budget wasn't expended at the lower amount, but it's increased now. Can you talk a bit about that?
Yeah, so part of the issue that we are beginning to see in the business meeting expense piece is that we are having more and more conversations relative to outreach, relative to our banking, our financial literacy. So we want to make sure that we can expend dollars to be able to, for example, have the expense associated with the fairs that we put on. In addition, we had never had that line item really, Councilman, when you go back to 14. And so we were looking at making sure that we had enough dollars if we ramp out our community outreach and want to spend dollars to hold events that will be informative to the broader community.
Okay, thank you, Treasurer. And then if we move down to custody of funds.
Yes, sir.
And there's a increase to that line item. And is that?
Which line item are you referring to, sir?
This is the beginning of custody of funds 113003.
Yes.
Is that attributable solely to the transfer of the position from finance to custody of funds?
It is plus fringe benefits associated with all of the custody of fund staff. So it's one position plus the other expenses associated with fringe benefit for the custody of fund staff.
Okay, and does that, if we move down to the bottom of that in terms of custody of funds,
And the total line?
okay, yeah, so that's the same. The
That's-
numbers are different a little bit from the total than what's up top.
That's only because you see the reduction there in line,
Oh, yep, and the
in
temporary.
longevity,
Longevity.
because longevity is no longer factored into the budget. It's dealt with from the budget area. They take longevity out because you don't know whether longevity is going to be, when it will be applied, as same with sick time. You know, you don't know how many people are going to actually have sick time. So we no longer put it in our budget. That's something that OMB has decided to do. Oh, yeah. Oh, I'm just being informed that regarding some of my union salaried employees, they are not getting the longevity that was that they may have gotten in the past.
Thank you.
Yep.
Thank you.
Yeah, I figured you'd get my, my detailed budget put back at some point. Yeah, that's the chair's budget detail. Can we go to the MRF presentation?
Yes, we can. You guys have probably seen this slide in the past. The MRF, the acronym for Municipal Employee Retirement Fund, is a defined benefit plan funded by three sources: city contributions, employee contributions, and the returns from investments. The trust itself is separate from the city, and the assets are held for the benefit of the plan participants. The Treasurer and the Pension Commission have fiduciary duties of care, loyalty, and prudence regarding those assets. There's approximately 5,381 participants. Our assumed rate of return is 7.75. I will note that that 7.75 is down from what it was historically 8%. That is a result of working with our consultant, NEPC, who every year gives us a capital market assumptions, and the capital market assumptions figures what the return will be on the portfolio given the expected returns of fixed income, equities, and alternative securities that are in our portfolio. And they do a 5 to 7 year forecast as well as a 30-year forecast. And so we're always, right now, as I said earlier, the fixed income world is not generating as much of a return as it used to. So fixed income and equities comprise about 5% of that 7 3/4 assumed rate of return, which we would love to see that back at 6, 7%, but that's not where the market is today. So we dutifully reduced that down from 8, because what we didn't want to do is have a number that was unachievable and therefore increase the ARC payment as a result of not being able to achieve the higher rate of return that was assumed at 8%. Historically, the net return on investments since the inception of the fund is 8.6%. Flipping over, I made mention of this earlier, but since December of 2011, when the value of the assets was $898 million, as of March 2015, they are now at $1.047 billion. The cumulative gain in the value of those assets is $149 million, which turns out to be about a 17% return since December 2011. Now, I would like to, because we are a team in the Treasurer's Office, I'd like to also allow my colleagues and staff to engage a bit in this presentation. So at this point, if you don't mind, Mr. Chair, I'd like to turn this over to Wayne Moore to walk you through a couple of the performance metrics of the MRF.
Thank you, Treasurer Cloud. Good evening, ladies and gentlemen. As Treasurer Cloud was saying, there were, at the inception of his tenure, we did a number of things at that point in late 2011. You know, we were in the midst of still the economic downturn, so we hired a new pension consulting firm, we hired a number of new managers, and we implemented a new strategy which ultimately contributed to the $149 million of gains and the 17% return that he was referencing earlier. I won't go into all the details on this slide, but I think the main focus would be the bar next to the right, says 2014. These are just the portfolio values and into 2015. If you could just flip the slide, ma'am. Right. This is an illustration of our funded status, and the goal here is just to show that at present, through the end of last year's fiscal year, we had reached 77%. And for those who may not be familiar, the funded status is a representation of were we to need to fund all of the current liabilities at one time, how much of that could we cover? Of course, we don't cover it at one time. What we do is we pay out to the beneficiaries between $8 and $9 million per month. That's the cash that we must have. But it's a good way to illustrate the health of the fund, which is growing healthier, and with respect to how the City of Hartford stands relative to other similarly sized defined benefit plans, a 77% funded status is considered pretty good. Next slide, please. This last slide I'll cover is really the idea here is just to illustrate that there are three primary major pieces of cash flow that we look at to, so if you look at the far left column, you'll see it says contributions, $55 million. This is an illustration of, for the previous fiscal year, the contribution that came from the city, $42.7 million, and the employees' contribution of 12.1, which adds to the 55 million. And the next column illustrates what I was mentioning previously about the disbursements, which added up to approximately $96 million. The difference is almost $41 million. And so the question is, where does that money come from? And the answer is it comes from investment gains. So that's the benefit of having a actively managed portfolio with the investment managers that we employ on a day-to-day basis. And in this case, for fiscal year 2015, it resulted in a net increase in the pension fund of approximately $90 million. I think if you just show the next slide, it just shows the same information for 2014. So I think in the interest of time, we could just leave it there. Thank you. Yes, sir.
If I may, I don't know if that concluded the presentation. Could we have the cash flow charts going back from, let's say, the start of 2008 to the current? I want to look at those for historical reasons.
I didn't hear you
From 2008 to current. You've already given us 14 and 15, but if we could have those going from 2008 to current, so we can see what the historic flow is in terms of what your investment information is, how much there's a deficit every year, and what our contribution is relative to that. I'd be interested in really seeing that information.
So you would, essentially what we show...
The same information, just different
going
years.
back to 2008.
And I'm very glad you presented that information this year, because that gives us, how much we're short in terms of a pay-as-you-go system, but how much money we're making as well, and how much you're clearing every year. So,
Sure.
thank you.
Thank you. I'll take it here to the next slide, which is, Councilman, really going to, I hope, provide you with a little insight. It won't go back to '08, but I wanted to, in this slide, give you a sense of the annual contribution amounts and looking at it going forward for you. So from 15-16 out to 18-19 fiscal years. As you look at the top line, every year we create, through Hooker and Holcomb, our valuation. This valuation is based on the data we receive from the finance department as to salaries of employees, and then we calculate how much the contribution is going to be, both from the employees, the city, right? And then as we build that up every year, and it's looking backwards, so in April of this year, we get the evaluation for last year's data points, right? So we're always working in arrears. But what we do is we also look forward to project what the contributions look like. So on this first line, when we look at our estimate, because we asked Hooker and Holcomb to go forward a couple of years, we did a 4-year look forward. And so this is what was originally expected to be the contribution that the city would have to pay. And if you notice, I put in parentheses up there, includes the board and library. Oftentimes, you'll hear the distinction between what the city must pay, but the way we view it is it's the city, and in the city it's police, fire, municipal employees. We also always, for our purposes, include the Board of Ed and Library. But the board and library's payment is actually paid by the board and the library independently. So it's not a dollar amount, although it comes up as a gross amount, it nets out to what the city needs to pay. Okay, so let's look at 15. So what happened in 15 is we originally thought the payment was going to need to be $44.4 million. Then we were advised by our actuaries that there was a new mortality rate table that we were going to have to have. So we had a $44 million. Originally, we had a number of gains. As you go back to that slide, we had $100+ million in gains. So that number, actually 44, dropped down to $40 million, but then it was pushed back up because of this mortality rate, and that was 42.6. When we were approached by the administration looking for cost savings for this fiscal year, what we decided to do was, rather than realize the mortality rate increase in one fiscal year, we decided with the commission to phase that in. And by doing so, we're able to reduce that $42 million to $40.2 million. That difference is a savings that to the art payment of $2.3 million. So that's $2.3 million the city can recognize as a savings in this coming budget year. The bottom line is the difference between what we originally, through the valuation, assumed of 44.4 versus the phase-in approach, which is the number we're going to go with. So we ultimately will be saving $4.2 million to the art payment. That methodology works through the chart, and so as you will see in the bottom line difference, in the next 4 years, we're going to be saving you 4.2, 4.5, 5.7, and $6.8 million, respectively, in those years. We recognize how challenging things are, and we try our best to be good partners with the city and do whatever we can to reduce that art payment. And we have, I think, strived to make sure that that occurs and are happy to do so. With that, one of the things, given all of the things that occur relative to the MRF, there's always an underlying strategy, and in our world we call that our asset allocation. It's the model through which we make our investment decisions. It's how we disperse the dollars, and I would like to let my CIO, Mr. Draghi, walk you through these next two slides to help give you a better sense of how we do what we do.
Good evening. I just wanted to say I think this can be relatively brief, but if you look at the slide presentation, really the most important message here, I think, is the bottom line, as it usually is. The expected return over 30 years, which is the type of time horizon we're looking at with pension fund investing, because that's effectively the life of the liability that the city faces. We're able to hopefully project a 7.7% return relative to what we've compared to here is a 60-40 equities fixed income portfolio, which is kind of a standard pension fund allocation or investor allocation. We are looking at that 7.7, which more or less equates to our long-term estimated return that the actuary uses, as Treasurer Cloud referred to previously. We also think that that number generally can be a little better by about 25 basis points or 1/4% for active management, which is what we're using both to move towards within our asset allocation classes, but also by using active managers who we like to think can generate a return premium to passive index funds, which is what this is all based on. I would also then want to move up just, let's see, 2 lines to the number that says 11% in the left-hand column and 11.2 in the right-hand column. That's the expected volatility or risk, at least in the pension world or the investment world. Volatility just meaning that we're able to get a premium on returns at more or less the same level of risk or volatility, and actually a little lower level because, in the simplistic way, there are more numbers in the different columns or in the different areas of the left-hand column, which is basically that we're diversifying our holdings. So by doing that, we're able to limit risk and hopefully still get the same level of return. As I'm sure you all appreciate, investment risk is a very important thing. It's what we spend most of our time thinking about. From a pure volatility standpoint, which just means, markets up, markets down, we all hear that every day, and it's almost, too much to bear. But the volatility does affect us in that the city's pension contribution can vary widely because of that. So one of the things we try to do is limit volatility for its own sake, just so that the city's pension contribution is what you would say more predictable and easier to budget for. On the other side, there is also another element of volatility, which is negative volatility, which is, or I should say, loss of funds, which is another definition of risk, and that isn't necessarily easily portrayed here. But I would tell you that by virtue of being more diversified than, say, the standard portfolio, we like to think that we can avoid being caught up in so many, or in the significance of down markets. So effectively, the cliche of not keeping all your eggs in one basket. So that's something we've been very successful at over time, is effectively losing less money than the market. And over time, that compounds a benefit to us that has allowed us to have a net 8.4% return, which is not eye-popping. It's not what you tend to hear when people talk about stocks and really great outcomes. But it's better than the actuarial estimation over a long period of time, which accrues to the city's benefit in a very significant way by compounding. Unless there were questions, I was just going to move to the next slide, and just to point out that what we have here is our target. We are moving towards that, and where we are is here in this pie chart. And just to let you know, at current, if you could read those very small words, that our equity allocation, which is stocks, are roughly, if you put those slices together, we'd be at 41%, which is above our target right now of 32%. On the fixed income side, we're more or less at our target, so if you put those pieces together. As we work through reducing the equity component of our portfolio, we'd like to think that that process reduces risk, and then we replace that with alternatives, which sometimes can sound a little scary, but generally speaking, what we're looking at are things like private debt and real estate, which yield a better cash yield than fixed income does, and are generally, if you pick the right managers, less volatile. So again, you get to the issue of the impact on the contribution over time. And then also hedge funds, which is another thing that can be or sound a little scary, but it's something we are using actually to dampen volatility, to basically add even more diversification, because we're at a point in time where both the fixed income markets and the equity markets are at very high levels, and unfortunately there's more risk to the downside than the upside, and we like to think we're moving assets in a way that will prevent any slip in those areas or any significant problem in those areas from hurting us overly, disproportionately. And then one of the key factors in all of our private investments has been that they generally either yield or generally are yielding cash at a fairly significant rate, which reduces risk but also helps us deal with the issue of having to pay out significant amounts of money because we have a fairly mature population of our pension beneficiaries. So that means we don't have to liquidate active investments as much. We can live to some extent off of the cash that's generated by the investments. So unless there are questions, that's all I wanted to say.
Councilman Deutsch, this is questions for the entire presentation. I'd like to concentrate on the MERV, but questions will be open to the entire presentation. Councilman Deutsch.
Thank you, and through the chair, I'll ask some very big questions of approach and philosophy, but not necessarily anticipate a precise answer, maybe a statement of philosophy, the now or in writing. One is, of course, many citizens, you mentioned active management, and ordinary folks who watch CNBC and read the Wall Street Journal and so on, read the comments that active management is not always better, even in the most intelligent of firms and individuals. So maybe you could say something about if we should all endorse active managers. Second, people have reservations, as you well know, about hedge funds. Again, even with a lot of insight, some people make mistakes that way. And we're talking about pension funds, not individual investors. And third, there are some who advocate that large funds like ours divest of certain sectors. It used to be tobacco, of course, and to some extent still is, and now it's non-renewable resources. And major universities, Harvard and some others, have movements to divest of certain sectors that may be harmful to the climate. So I wonder, it's a little far, if you can say something about whether those things have been considered in both a conservative and a progressive approach. And if you can't answer it, I understand, of course.
Understood. And I just want to say this is generally, we're looking for budget questions. This is a budget proceeding. I don't mind getting too far off the weeds in the philosophical discussion, but remember, let's try to keep it to budget questions.
I think it's...
No.
You don't think it's budget?
I'm saying answer the question, but I'm just saying let's get to budget questions and try to stay away from statements. Questions are the order of the day.
Thank you. I'll try to respond. I think I captured all of what you asked, and I'll start with the philosophy. As a golden rule, we are investing to provide a benefit to the employees of the City of Hartford who have toiled for many years, 20, 25, 30 years, and provide them a lifetime benefit. And so we do not approach the investment of these assets as if they were our own, because they are not ours. we look at trying to invest to protect against the downside. It is far worse to lose principal, i.e. lose money, than to not make as much money as the next guy. So we're not focused on chasing equity returns. When you hear on CNN that the market went up 35 points, that may be great for somebody who is trading stocks in their living room. But we're focused on the 5,000 people that work for the City of Hartford and make sure that the portfolio that we create will consistently generate a return in excess of that 7 3/4, because that 7 3/4, anything in excess of that, means that we're able to fund that benefit payment. In addition to your other question, yes, we are constantly looking at those types of social issues, whether it's guns, whether it's blood diamonds. We make sure that we have an institutional service, which is called a proxy service, that because we're shareholders of the companies that are purchased by our managers, we have a say in voting on some of that shareholder, as a shareholder, the direction of said companies. And we have a firm that alerts us on a regular basis on almost every, on every trade that we make. And we defer to them to make sure that we give them a policy guideline on what we believe is appropriate, and then they must follow our guidelines. So if we say no blood diamonds, they will not vote on behalf of the MRF for anybody that's associated with blood diamonds, as a simple example. Gary, we want to add anything to that proxy voting?
No, but I would say that, well, nothing significant, but having ISS, our proxy voting agent, allows us, basically by being invested in things, to have a say in their corporate governance, the corporate governance of those entities. So we'd like to think, and then the policy that we have with them, which we review periodically, is one that is intended to mirror those of labor plans and other folks who we consider very progressive thinkers. So we do hope that that part of our process is work, firing on all cylinders and helping us have a seat at the table in trying to make companies better corporate citizens.
Any other budget questions for the treasurer? Therefore, I noticed we did the restructuring, and I don't want an answer to the question. Just in terms of restructuring of the debt, like this year, we've got a nice debt payment. I'd like to know what the debt payment schedule looks like going forward, and that we don't have to get into the details of it. You can provide it to us in an email, so we can look at it and know what the liability is going forward for us on the debt on the debt restructure.
Okay.
You have it right there. That's fine, but
I do. It's from my reference guide, so this is why it comes in handy.
You should share that with us.
We told you there's a cost associated with it, just for council people. But
I like that suggestion from the council president. That way you don't have to tell us, you can just send it to us. And then
Trust me, I was trying to avoid this meeting anyway, so I'll keep that in mind for next year. So right now, 2015's payment was as a result of the restructuring that we did in 13. That got us to just below $25 million. This year, we're looking at just above about $32 million of a debt service payment. So what I don't have is the restructuring analysis that we've done. I wasn't expecting to discuss the restructuring this evening, but we have an analysis that will show what will happen. In particular, it looks like it's going to be about a $12 million reduction for 16. There's a subsequent reduction in the 17 budget as well. So what we're trying to do there is, like we did in 13, is provide budgetary savings in these early years. It will have an impact to increase the debt on the outer years. But, you know, when we're talking about where debt was small in 20 years out, it may increase a bit, but we have two options with that. Yes, it increases, but we also have 20 years to amortize that debt. And as a result, we can always continue to do a restructuring that will help lessen, because my goal has been, and I shared this with you all before, the bar graph on our debt is sloping. And so as it slopes downward, so there's less debt service in the back, but as you can see, it's higher up top. Our goal is to try and get this to be much more level, and we can accomplish that by two things. We can do the restructuring, but we also have to be fiscally responsible relative to the amount of debt we're issuing. And we've talked about this over years past, and I'm happy to say that we're getting close to staying underneath that $50 million. And when I say $50 million, we may issue $130 million worth of bonds, but 100 of it will be for school construction, and 80% of that is being reimbursed from the state. So when we talk about $50 million of new money issuance, it's the capital project stuff, ex-schools, that we need to be focused on. Now, this year coming up, we've got a large amount of money that has to be gone, I would call this mandatory, with regards to the levy program. There's $20 million that's being authorized to the CIP for the levies. We have to fix them. So that's 20 million of the 50 million. But as we go forward, and every year there's going to be something, I'm sure, that's a must-do. But the COO and I have been talking intensely about CIP and about how we're going to begin to manage that CIP process so that we're getting tighter and tighter with the amount that we budget, so that we prioritize with you guys about what investments you want to make through the capital program.
If you could provide us some of that detailed analysis at some point in the future, that would be, I think, very helpful for us. I think we'd all like that question. I was trying to transition into the capital improvement.
Into what he was talking about, CIP? Yeah, just one observation for, I guess, for the council as well as you, Treasurer, COO. This $12 million that is factored into the budget, I think we need to have a sufficient amount of information prior to adopting this budget and understanding that, right? Because we can't have a disconnect between those revenues being built into this budget and then take up the item in July, August, and this council has questions, right? So I just want to make that observation.
Well, I don't want to speak for the COO, but are you planning to do CIP tonight, or are you going to move that to another evening?
I understand from Mr. Hill that it was a short presentation. Really short, and I think we'll answer some questions. We'll try to limit questions this evening, and what I'll say to my colleagues is this: during the entire 2 week during this budget process, we're going to discuss CIP, what our priorities are within the capital improvement projects, and we can do that among ourselves. We don't need to have that discussion tonight. We do need to know what is there and what we can plan for. And as we have discussed privately, there are some things that may change even before we end the budget cycle about money we've designated for in previous years. So let's just try to get a base understanding of CIP, where we are right now, and then we can have that discussion throughout the 2 weeks. Okay, so if I may transition, thank you. Mr. Hill, Treasurer, please don't leave. I think since you're an integral part of this discussion. Oh, no. Carmen, stay. I don't blame you. Everybody wants to go home. So this will now, for purposes of our commercial interruptions, we're now going into the capital improvement part of our budget, the CIP budget. Mr. Hill, the floor is yours, and we will, remember, let's hold our questions unless we have something very specific. We can begin our discussions about what our priorities are in the budget at a later point in time. Mr. Hill.
Thank you, Mr. Chairman. I put together just a few slides, the overview of what the Capital Improvements Program is. As you know, it is our multi-year planning tool to maintain our infrastructure and assets. The next slide shows the things that are the general criteria for a capital improvements project. They've got to be capital assets that are tangible and intangible, but have significant value and a expected useful life of beyond 1 year. The most common examples are land acquisition, construction or major improvements to public facilities, roads, and of course large equipment. The financing comes through a variety of sources, including grants from the federal and state government, corporate donations, capital outlay funds, but the majority of it tends to come from debt. Here in Hartford, primarily general obligation bonds. As you're aware, to issue general obligation bonds require the co-signatures of the mayor and the city treasurer. On pages 34-16 and 34-17 of the budget book is a very colorful and summary of the capital improvements program, not only for the recommended FY16 budget, but also the 4 years of planned CIP. Altogether, the 5 years across all categories aggregate to just over $577 million. But as the treasurer indicated previously, there are a variety of offsets to that amount. So for that same 5-year period, the gross total of $577 million after expected reimbursements and other sources reduces to just under $369 million. The pie charts on the screen and the third and fourth slides of the presentation represent the total recommended CIP by category. This is just the FY16 CIP. And as you can see, the bulk of the dollars are shown in education, just over 54%, followed by public works. Again, this is the total CIP. The very next slide shows the net CIP, net of other funding sources, meaning non-general obligation bond funding sources, non-city funding sources. And you can see that the education decreases to about 25.5%, and public works increases to just over 44.5%. That is the high-level view of the makeup of the capital improvements program. The details on page 34-16 and 34-17 provide a project-by-project and fiscal year-by-fiscal year plan to maintain our education facilities, public safety facilities, parks and recreation, broad category of public works, which is city infrastructure in general, and development. Those for fiscal 2016 aggregate to a gross total of $136,450,000. But after the offsets shown at the very bottom of the spread page, which is the far right of 34-17, the LoCEP reimbursements, the Hartford Park Trust Fund, Connecticut DCD grants, and education reimbursements being the largest offset, the fiscal year 2016 CIP net cost is estimated to be $78,200,000. It is significant that the capital improvements plan, this process is project authorization. As the treasurer spoke eloquently to earlier, there is another side of it, that is the actual financing of the projects. And it is important that the council and the public in general not mix or confuse the two. There's project authorization and there's project financing. The financing is arrived at to provide the funds that are necessary to move the projects forward in a timely fashion, those projects that are moving forward, but it is very mindfully created to be dovetailed with our affordability. And with that, Mr. Chairman, I'll conclude my presentation.
I only want to, if I may add, I think Mr. Hill said very well the distinction between projects that are allocated but unissued. And so let's just take an example. When we talk about Weaver High School, we've authorized $100 million for Weaver. We're not going to spend all that in year one. So we'll draw down off of that. And so when we actually go out to the capital markets to borrow that money, being sensible and based on soft and hard costs, a percentage of that or a part of that $100 million will be spent in fiscal year 16 and a percentage will be spent in 17. So just to be clear, we'll ultimately spend $100 million, but it doesn't mean that we're spending it all in year one.
And if I may, just so folks in the public who are looking at the documents and looking at them online, just because you don't see the Weaver expenditure in the education, that money was allocated in last year's, I believe, CIP.
Right.
They're drawing down on those funds. Those funds are being issued as the treasurer sees fit. So if folks look at this and they don't see their project, their project may have already been financed. And I just want folks to.
But if I to you, Mr. Chair, you know, the budget book is now updated. Updated in the sense they've got a new way of design of showing the capital projects. So actually,
The summary page is not. I didn't find it.
oh, you can't find the summary page. So what they've been doing is on the educational side, they've been showing the summary of a project. So what they're doing now, why don't you go ahead and walk them through that?
Sure. There's one significant improvement, in my opinion, to the capital improvements program this year. It's a bit of a return to something that was done in Hartford internally a number of years ago, but beginning on page, after the summary, beginning on page 34-20, what you'll find is a one-page summary for each of the projects included in the capital improvements program. What the treasurer was alluding to is that if you look at any of the pages, the format, the layout is the same. There's descriptive information about the project, the location, the customers served, the financial activity to date, which in this is as of March 31st, and then at the bottom right corner, the anticipated budget distribution, so that you get a sense of when we're expecting expenditures, if they're known, by fiscal year and quarter, and for which of the line items. But in the very middle of the page, the financial summary, if you focus on that, you'll see the very first column to the left says adopted fiscal year 2015 and prior. Right, so for Weaver High School, had we done this earlier, Weaver High School would be in here, and the only numbers shown would be for fiscal 15 and prior, aggregating to that 100 million. This is something that we've implemented this year, and we're going to carry it going forward so that in next year's budget, if there is a project that only existed in 2016, it will remain in here, although there is no future spending, so that we will be able to tie the different CIPs together to see when there are projects that have been previously approved and the approval for them is complete, meaning no planned expenditures going forward. That way we'll have a better year-over-year way of following the project, if you will.
And I think to illustrate, if you look at 3420 at the Clark School, you'll see what Mr. Hill references there, so that in fiscal 2015, you had $1 million there that was adopted, and in 16, you're looking at spending $4 million, but as you go out in 17, 18, 19, there's no dollars there, and the total project, therefore, will be $5 million for that renovation at Clark School.
Councilwoman Jennings.
Yes, thank you. Through you, Mr. Chair, God bless you. Mr. Hill, can you tell me, or Treasurer Cloud, can you tell me where a lot of our schools require reimbursement from the state? Is there a place where we can go to and see how much has been reimbursed for each school?
I do not know the answer to that. I know the state produces information on what they have reimbursed. I don't know if they do it by school. It may be in the aggregate, but we can look into that. If not, the school building committee may have that information available.
Oh, thank you. Through you, Mr. Chair. One more question. How are state reimbursements calculated into the budgets? As the money is paid back to us from the state after we borrow the money by floating general bonds, how do we know how much money has been paid back, and where is it articulated in the budget?
I don't know that the number is articulated in the budget. It's reflected in the annual financial report, the CAFR, the Comprehensive Annual Financial Report, which will show monies received during any given year, as well as the receivables that have been carried from prior years and how they wash against each other. For the budget, that's significant because, as we've been finding in recent years, we have captured the value of those school construction monies in one year's financial report as a receivable, so that in the next year when those monies come in, they're not recognized as a revenue. They've been recognized in a prior year as a receivable, so they offset each other. In this year's budget, I believe we have lowered our estimated revenues from school construction reimbursement based on that fact. We've seen in last year and this year that the monies that are coming in, while yes, they're positive, and we're getting to a presentation that will show the dollars that are coming from the state to the city in the aggregate against the receivables that are already on the books, the net of that number are the revenues that would benefit this fiscal year. That's a long-winded way of saying that the existence of those receivables are reducing what we've included in the budget for school reimbursement. This cold is getting the best of me. School construction reimbursement monies in the FY16 recommended budget.
Council President?
And just to be clear, the administration has changed the way it treats reimbursements now from revenues to just repayments?
No. We're treating them the same way. What's changed is how we're reflecting and incorporating them in the budget document. It may have been in years past a thinking that, well, we're going to get $2 or $3 or $4 million in reimbursement monies. There's a lower number in this recommended budget, recognizing the existence of those receivables in prior years.
Okay.
If I can add to that, the reimbursement that you're speaking about, Councilman Wooden, is the grants fringe reimbursement. Grants fringe reimbursement. That used to be counted as revenues, now it's counted as a contra benefit or expense.
Thank you, Mr. Chairman. It could be that you feel the question I have is already answered sufficiently. If you look on page 3417 of the capital improvement, under development, the second orange line under development, we see neighborhood development, housing, the second line, redevelopment and implementation, property acquisition, redevelopment, building demolition. We see below that a few lines, growing Hartford businesses, and then planning and economic development. And I see a little back further on 34, 72, 73, further explanation and delineation. Is there anything further that we should be aware of in terms of how to distinguish among those three lines and what the criteria are for, let's say, funding growing Hartford businesses, so that any of us in council can judge whether an expenditure in one of those areas is suitable to our priorities?
No, I do not believe there is any further explanation than the identification of the project and the description for each of those line items you referenced, included back in page 3466, 3472, and so on. The
Right.
descriptions for the pages, the amounts, the customers, and the location of use for those monies is included on each of the respective pages.
For you, are those in general available online? Any of the particulars, if council members want to find out about allocations there?
I'm
Are they
sorry,
available
I don't
online?
I don't understand the question.
If there's a certain project, let's say redevelopment and plan implementation, as listed on 3467, and any council person or member of the public wants to see exactly what the endeavor is, what the project is, can he or she look at it online to get more of a detail of the project?
Of which project?
Let's say 3467, redevelopment and plan implementation.
Well,
And,
the
and the
project
allocate-
description, Councilman, is there in the middle of the page,
Yes.
which describes the initiative.
I see that. I'm just asking if, let's say, 3 months from now, 4 months from now, we'll learn of a certain investment, project, redevelopment. 3467 as an example. 3467, that's one of the lines, redevelopment, implementation, property acquisition, and so on.
Yes, in our Munis financial system, we account for every dollar that the city spends. And if you want to track the expenditures for any line item from a capital improvements program project, we can produce that information. We have dozens, dare I say, hundreds of projects that go on every year all over the city. If you have questions about any specific one, we can provide details about any project that council or the public desires.
But through you, I guess what I'm asking is, rather than bother you, is there somewhere online that let's say there's a PDF for the descriptive text of exactly where that money is going?
If I may, in terms of you all going back and forth with this, how about at the end of the budget cycle, we make a non-budget, non-financial resolution, thank you, it's late in the evening, non-financial resolution stating that we'd like more detail with respect to some of the bonding projects that we have before us.
Very good.
Okay,
thank
you're
you.
looking for some more specific information, we can certainly provide it, but this is not the place to discuss it.
Are you suggesting reporting?
No, not in terms of reporting. We'll put it. We'll talk about it. We'll put together a non-financial resolution, which basically states not for this budget cycle, that for folks who want to look some information up online about what this project entails or what the difference is, we can provide that
And
information.
through you, Mr. Chairman, just to be clear, for this category, just sticking with 34-67, these are to be identified projects at some point during the fiscal year, rather than specific projects right now that you could specify. Is that correct?
That's correct.
Okay, and with respect to, if we were to adopt this as is, as a matter of process, then Treasurer and the city, you'd have to issue bonds in order to authorize expenditure out of here?
Yes, yes.
And I'm trying to get clear on the process for the council. So is there some point along that process where the administration comes back to the council and says these are specific projects, or you would seek to issue bonds for the generic category to be utilized?
The process that we go through when we issue bonds is identifying the intended use. That intended use changes throughout the year depending on council's decisions and things that go bump in the night.
That's great.
So we borrow essentially a big bucket of money is the easiest way to look at it. And the projects that council has authorized in the CIP are what we are allowed to spend those dollars on, and only on those projects. For any individual project that we want to spend on that has not been approved by council, you will see them come to you in resolutions or ordinances, authorizing an undertaking for a road improvement or a road reconstruction or a building renovation. So in addition to the more broad authorization for specific line items, such as a renovation of a school or a city building, in development services is to provide the capacity for the city to fund economic development and redevelopment activities during the year.
So, and if I could have your indulgence, Mr. Chair. So, just coming back to this point, right, this would be seeking for development, development services, a pre-approved generic pot of funds available to support initiatives that broadly fit within this category.
Within this category, correct.
Anything.
And if, Mr. Chairman, if I may, we do have in Hartford this wonderful tool, our open data portal. It provides more information than any human should ever desire, including our financial information, including information on our capital improvements program. So if Councilman Deutsch or any member of the public would like to seek information on any of our capital projects or any of our expenditures, I would encourage them to visit that website and look around, because there is a wealth of information available right now.
And if I may add one point that I think is salient to this, because I understand the question now better, Mr. Deutsch, what you're really asking is, so we're issuing or recommending $3 million, but we are yet to identify what those projects are. When that project does get identified, you'd like to be able to see what that project is. That's basically your question, yes? Okay, so it was correct in the statement that when we do our bond resolution, we're looking through those capital project authorizations, and we try through bond counsel to articulate what those are. But let me also add that 2 years ago, as part of this question about how do we follow the flow of money, my office, along with the finance department and bond counsel, worked with development services to create a new policy relative to tracking of federal dollars. These are tax-exempt municipal bonds that we issue. And quite frankly, we did poorly at it a long time ago. We did not track our capital projects well. This budget book, I think, is our best effort thus far looking at how we're tracking, because it's following the policies and procedures that were created by my office and bond counsel. The finance has agreed that, okay, this is what we're going to do. And it's literally like a 20-page document that shows every step of the issuance process. So it's a post-issuance process and procedure book that I have to review. Daryl has some responsibility to review. The finance director has to review. Bond counsel looks at it. And we literally go through and we check off the box to make sure that everything that's supposed to have happened happens now. And so now we feel much more comfortable about the CIA expenditure because we are tracking it from the day it gets issued, so the day you guys sign off on the resolution, to the 20 years from now when that bond is matured. We're now tracking every penny. And that's what Mr. Hill means when he says we can literally track our expenditures relative to bonding now. And that's a humongous move forward in terms of transparency and accountability.
I'm going to go to Councilman McDonald was first, Councilman De Jesus is second, Councilwoman Jennings is third. It is almost 9.
I'll be quick. Thank you, Mr. Chair, through you. My question is similar to Councilman Deutsch's, but it's more focused on the projects, for example, 34-64, the library renovations and improvements to various branches. Would like to see the detail of which branches. And I can save time tonight and just send an email on each of the different ones that I would like to see more detail about which projects are being
Mr. Chairman, through you, Councilman, I can appreciate and understand the desire to have that information. I offer no resistance to providing it. The challenge with including it in the budget book is it then ties our hands so that If we say that this dollar is for this branch and this dollar is for that branch, then we can't do anything else without coming back to council. So we could find ourselves marred in the process of moving $2 from over here to over here. The way that the CIP is presented now, it's for libraries, whichever library needs the funding. We can get to some specificity if we know, and I believe that we have, for example, with Park Street. That the money for Park Street is for Park Street. If we want to use that in some other place, then we've got to come to council and ask that those dollars, ask your approval, consideration that those dollars be reallocated. But the broad library line item is for all of the libraries, wherever they may need. Similar to a recent project next door at the main library where the floor was coming apart, right? Had we needed to reallocate dollars from a different branch to the main library, a project that was initiated and underway in a week or so's time could have taken 45 days or 2 months just to get started on the project. So I would respectfully caution council against including a very precise detail in the budget book except for projects that are isolated. Like the individual school projects, and even in some of the school projects, or one of the school projects, there is a line that's for general renovations, general projects. I think the line you're referencing for the library is in a similar vein.
Well, in that particular instance, how is it determined which libraries need the renovations? Is that done through the Hartford Public Library Board?
There are requests that come from the library. It's typically for repairs. Like the floor next door. Broken windows, it's minor capital, but you know, the things that I referred to a few moments ago that go bump in the night. When we left yesterday, everything was fine, but when we came in today, the heat didn't work. So we need a new boiler. Where do we get funding for a boiler when we don't have time to come and seek legislative authorization to reallocate funds? It needs to happen now, or we're going to lose that building. We're going to lose it for a period of time anyway because there's no heat. But in the dead of the winter, to take what would be an ordinance to reallocate, it's an ordinance that has a public hearing requirement. It can't be done in less than 3 weeks, right? The whole time the building's down. The broader authorization and for some of the projects provides us with greater flexibility to deal with the things that we deal with on a daily basis in local government.
Okay, I appreciate that, but for the interest of time, what I'll do is I'll just send my email, and if that's your answer to any individual question, then fine.
Sure.
Thank you.
Councilman De Jesus.
Through the chair. So, one of my pet peeves with the CIP, and I think I almost feel guilty for bringing up an issue, and I can tell you why we're here. You know, with the renovations, you have, for library renovations, you have redundancies. You have 3464, you have library renovations, improvements, and upgrades to various branches. And then you go as far as going to 3468 and say the Park Branch Library, which that's my neighborhood. Of course, I want that to happen. But you have a lot of these redundancies where you're over-specific and you're specific in zoning in. So in total, you have, if you combine both quantities there, it's about $21 million. I don't understand when you say that you have language where it's very broad and then you have specifications on specific libraries. And my concern is legally, I asked for a legal opinion on this when Sandy was here. It was based on the language that was given to us, and if that is suffice for council to be accepting some of these projects. This came about when the Bushnell Carousel happened. The mayor went out and announced it in March. It came out in the Hartford Courant that there's $1 million allocated for the Bushnell Carousel. I looked through the budget. I was trying to figure out, because people in downtown were asking me, where is this money coming from? I said, I don't know. The mayor's saying it's coming out from this allocation. It turns out that legally he did not have enough in that budget, or he could not transfer from that budget, or the language in that section was so tight that he could not use that money. So he came to City Council for approval because they were saying that Council had approved it already back in 2009. with a similar thing, but they didn't have the language. So now 2 years later, now what we have is just blanket language. I think as a council, I want to know exactly what I'm approving. I mean, I would want a second opinion on what are we actually approving here. Some of the language here is so broad. When we say business facade improvements, implementation, development projects, site preparations, you might as well cut all that out and say everything, because it's too broad. I mean, and it all started, and I can tell you where it started from. It started from the park, from the Bushnell Carousel, where the mayor had language in the budget that could do it. I mean, yep. Yeah. The question is, why are we here today? Who came up with the language, and what is the thought process of putting language in here that is so broad that we cannot specifically know exactly what's there? So that's one question. The second question is, you have the treasurer here that is going to ask for us to move our debt out a few years, which, you know, I'm going to consider because we considered it in the past. We want to keep ourselves at a $50 million threshold, right? How are we going to accomplish that when we're about 78, I think, or something like that, 78 this year with that? So that's the second question. My third question is, as a city, we should know a year in advance exactly what we're going to be looking at for the next year. That's being proactive. We're being a reactive city to say, well, I'm just going to have the council approve $3 million or $15 million, and whatever comes down the road, we would approve it. So how will we deal with those issues that come about?
Thank you.
I recall discussing this last year. I've been consistent. As you look through each individual line item in the capital improvements program, I think as you look through them, you will find a very strong mix of projects that have the specificity that several council members have spoken to and are seeking. There are a few line items that, yes, are deliberately broad, whether they be in the public works category or the development category. Libraries, as an example, the Park Street Branch Library, that 6.5 and 6.5 in FY 16 and 17 is only authorized for the things that are included in the description for the Park Street, or for the Park Branch Library. The general library, as I said previously, is for the entire network of libraries and the things that are needed, which is why you tend to see smaller amounts for those broad projects. Why? Because we're not managing a single family home. We've got an entire city, and we've got hundreds of millions of dollars of infrastructure in place that we have to maintain on an annual basis. And if it's council's desire, respectfully, council's desire to have such specificity for every dollar in the capital improvements program, then it is absolutely, as you know, at your discretion to endeavor to do that. But I think that what you will find in a very short period of time is that it's problematic. And it's problematic because when something happens that we were unable to anticipate, then it will stop. Why? Because I won't have the ability to authorize to make the repairs that are needed because we don't have it included in the language in the capital improvements program. So there are projects that we give very broad ability to so that we can do the things that need to be done. But the vast majority of the projects, particularly from a dollar perspective, because they're mostly schools, there is great specificity. And even within the projects that have broad language, there is specific language there that says you can spend these monies on this, 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 and this. If it's this and it's not in the language, we cannot use those dollars on it. In collaboration with the Treasurer's Office, we go through an evaluation of each capital project as it's authorized to make sure that what it's going to be used for is consistent with the language in the capital improvements plan for those dollars. And if it's not, because it says it's for roads and you can't use it for park, then we can, right? So I understand the concern and the desire to have specificity for each and every dollar, but that will be problematic. If not next year, then I would feel comfortable guaranteeing by the following fiscal year.
Here, if I can, I would like to see if I can, I don't know if I do it through the chair or here or this body, but I would like to get at least legal opinion as to some of exactly what we are approving and what is, for example, for...
Through the chair, I got the gist of the question. We'll ask that question to the Corporation Council. We can ask Mr. Alexander whether it is legally required for the items here that are vague, whether they need to be more specific legally for purposes of bonding. If the answer comes back and it's no, then it's no. Then it's a policy question for the council. The COO has answered the question as to the reason why. Okay? There may be some disagreement on this body, but we're not here to argue about the disagreement. It's a budget presentation. He's made the presentation, the reason why to do it. If we disagree with it when we approve the CIP budget, one, we can either make changes to it, not approve the allocation, okay, or have a more specific allocation request approved. That's our role. So let's not confuse the different roles. They're making their presentation as to why they're doing X, Y, or Z. They've explained why they're doing it. If we don't agree with it, then it's up to us to change it. But I don't think, in terms of getting into whether that's appropriate or not, I think that's for us to make that decision. That's why we're here.
And a follow-up question, this one's to the treasurer on this, is I am in full agreement of what you, and let me thank you, first of all, for all that you've been doing with that $50 million gap. It makes sense that you want to balance things out. We're all elected officials. It's an election year. Who knows who's going to come back? Who knows who's staying? Your plan, you've been working at it for 4 years. You know, and I think that what can be done when it comes down to the CIP to protect the integrity or the foundation of what you built on already, to prevent spending to go past 50. If you're gone or if you're not here 8 years from, or you get elected, what can we do to preserve that for 10 years down the road? We're still on pace of paying that debt and making sure we flat that out.
So whether I'm here or not, your body will be here and my office will be here, and I would first suggest that it's a conversation. That conversation needs to be an ongoing discussion about prioritization of capital expenditure dollars. You know, the goal is 50. As I said, there's some mandatory things that need to get done that might bump you up. It might, in fact, 1 year be less. Does that even itself out? Possibly. But remember, it is ultimately, this CIP budget is one that you all decide as to the totality of the projects that are going to be approved. They're recommended up through planning and zoning and then through development services, but ultimately you have the decision. And if you begin to putting aside the question of specificity or vagueness, you can get a general sense from the title heads of educational, public safety, parks and rec, public works, and prioritize which of those going forward for the next 5 years are what you're going to spend on. Then you have a good sense of that. But what has happened historically, quite frankly, is we've had a plan, because remember, you all vote for the CIP, but then you have 4 years planned for you in terms of what's coming. But there are times when there are special projects that come, whether the community is demanding that they want to see something done right now with regards to a high school or something that wasn't originally considered. You know, that's a policy decision. Do you want to include that? Does that extra $30 million take you to $80 million rather than 50? That's a policy call. But I would, to try and respond to your question, we, all of us, the administration, along with my office and this council, need to really have a conversation. And I think that conversation should not be happening every year in April. I think it should be happening July 1, September 30th, whenever. And I made this recommendation last year, that I think that we should begin a conversation soon after the summer where we've got plenty of time to engage, so that we're not here at decision time asking the kind of questions that get asked. If we were working collaboratively to get this done in September and we had routine meetings, and I will admit that since Mr. Hill came on board, one of the things that made this a little bit more smooth for us this year was because he and I have been meeting on a monthly basis, talking about and prioritizing how we're going to look at restructuring going forward. How much bonds can we afford to do? Working with our FAs, getting scenarios. I mean, we look at scenarios almost weekly on what happens if we issue this much debt or if we issue that much debt. So we're trying to be proactive and not reactive. I hope that's responsive.
Thank you. Councilwoman Jennings?
Thank you. Mine will be brief. First of all, I'd like to thank the Treasurer for talking about the fact that there's a process where we can track all the bonds. Is that process available online, or is that available to us?
It's an internal policy,
Okay.
so it's not online, but it is available.
Okay. All right. And also the owner's contingency fund, and I think it's the owner's contingency that is listed with, it's included in every major construction project, particularly when we're constructing the schools. When those owner contingency monies are not spent in the construction process, how are they come back to the city, but how are they highlighted in the budget? So how do we know where that money is? Is that also under the grants fringe reimbursements process?
As each project, and let's pick the very first one, that's a bad one. Clark School PCBs is the first one, but just using that $4 million that's recommended for FY16, that project is able to be completed for $3.9 million. That remaining $100,000 of authorization for this project, once it's completed, will be closed out, and we will not use that last $100,000 of project authorization. If we had borrowed $4 million for this, we would take that $100,000 and use those bond proceeds on another project that's been authorized by council. Net, we would get to, we have this thing that's called bonds authorized but unissued, and periodically we will go through and deauthorize projects. Again, in the Clark School PCB abatement project example, a $4 million authorization that's completed for $3.9 million. That $100,000, we'll track it as not needed, and from time to time, we will come back and have council deauthorize funding to keep our bonds authorized but unissued for active projects, right? It doesn't need to happen very often, 3 or 5 year cycle, but for the management of our capital improvements program, we should go through that process of deauthorizing completed projects, but also evaluating all of the individual projects that make up our bonds authorized but unissued, because as some of them get age and they haven't occurred, it may be for any number of reasons, but council wants to deauthorize a project to expand the COO's office. Right? We don't want to do that anymore, so we deauthorize it and the project goes away. But we should, at a 3 or 5 year interval, evaluate all of the open projects in our capital improvements program, and those that we are not going to move forward with should be deauthorized, so that our bonds authorized but unissued is managed at as low level as possible. It's impossible to have it at zero, because whatever the CIP is that council approves, that will immediately become bonds authorized but unissued. So just for that further understanding.
And I would just add, through the chair, to the councilwoman, our bond counsel, Robinson Cole, does sit with the finance department. They tend to do it yearly, and sometimes it's an off year, but they do walk through that process of authorized versus unissued to make sure that we're being consistent. Because, you know, when we issue and authorize a bond, we need to expend those dollars or, borrow against that within 3 years. So we want to make sure that we don't fall, because there was a history back in the 2000s where we would authorize something in, say, 2000 and not spend it until 2007. It was ridiculous. Or we'd authorize $70 million in 2000. We'd spend 5 or 10 of it, but then not borrow some until 2007. That's not an appropriate way to manage your CIP budget. So we've changed that focus by having bond counsel review all the projects on an annual basis with the finance department.
Thank you. Just a follow-up. So the owner's contingency funds are treated not as cash, but as authorized bonds that have already been floated to cover a project, and then we deauthorize them and then assign them to other projects? Is that how it's working?
No. Earlier I spoke to the CIP being project authorization, and then you've got bond issuance. Just because a project is authorized, the bonds aren't issued. The bonds are issued in a large bucket to provide funding for the projects that need it. As is shown in the bottom right of the project description page, the 6 different line items have that milestone. Not every project has the milestones because it's unknown, because it's in the out years. But where there's a milestone, we can see when we plan on spending money, and we will pull money from the bond proceeds to fund those activities in the specific year. So should the contingency go unused, as I spoke to earlier, it's an authorization that's there. The money would just be used on another project that needs money, and then periodically we'll come back and deauthorize any amount of a project that was not needed and the project is completed.
That concludes. Man. We know our lack of sense of humor. That concludes the hearings for this evening. I do want to do a little housekeeping before we leave. Human Resources we did not get to this evening, so Human Resources will be moved to Wednesday, May 6th. And we'll start that hearing at 5:30 on May 6th. I'm also inclined, but have not decided yet, we'll like to hear from people, if that's the case, on Public Works on Monday. So we have Emergency Services, Police and Fire. I don't believe we'll be able to get to Public Works, given the amount of questions that we seem to be asking. I think those departments will be much more, we may have to move them to Wednesday, May 6th as well. And unless there's any other comments, we are adjourned.